Okay, so to everybody who's just joined, this afternoon's webinar is entitled Key Considerations for a Sell-Side Programmatic Strategy. So it's the first in a two-part sell-side series, and it's following on from the launch of our programmatic infographics, which hopefully you've seen recently. These are providing guidance on key considerations and steps for developing a programmatic strategy, whether you publisher, advertiser, or agency. So we conducted some attitudes to programmatic advertising research recently, which has shown you that hiring and training people with the right skill set is a barrier to adoption. One of the big barriers to adoption of programmatic. Testing the impact of programmatic trading on revenue was another key barrier. And these barriers have been consistent across markets of different levels of development. And all of those topics really we want to talk about today. And, they fulfil part of IAB Europe's overall objective to educate the industry and provide guidance for developing a programmatic strategy. So it's going to last about 50 minutes, 40 minutes for presentations and a 10-minute Q&A. Before we start, let's take a moment to ensure that everyone's ready and familiar with the webinar control panel. You can see the control panel on the right-hand side of your screen, which you can minimize by clicking on the double arrow button and expand by clicking on the same button. There's also a chat panel and a Q&A panel, so you can submit technical queries through the chat panel, and you can submit questions to speakers using the Q&A panel. So this may answer those as we go along if they have time. Otherwise, we can come back to them at the end of the session. There'll also be some live questions that you can put forward. If you need help during the session, just click the red exclamation mark icon above the chat panel. Okay. So let's move on to introduce today's speakers. And our David Goddard, who's Global Head of Programmatic Trading at BBC Worldwide, Ray Plug, who is Chief Strategy Officer at Improve Digital, Michelle Ravenheimer, Senior Publisher Development Manager EMEA at Pulse Point, and Dave Frew, who is Senior Programs Manager at IAB UK. So let's kick off by having a quick look at the European programmatic market. Programmatic advertising has increased in importance to a market value of more than 5.6 billion euros, according to our recent programmatic market sizing study. And we've seen during the past few years the exponential increase of programmatic at a rate of, as you see here, around 70% per year. Our attitudes to programmatic survey, which I referenced earlier, shows us that programmatic is now mainstream. All of the stakeholders surveyed indicated that they're investing in digital mostly via programmatic, and that well over 80% of advertisers, publishers, and media agencies alike. So while everyone is investing in programmatic, now the majority of buying and selling is still manual. Over thirds of agencies and almost 3/4 of publishers state that 20% of this digital advertising is traded via manual processes. I'll hand over to David to take us through some key considerations for establishing what value can offer. So just hand it to David from IAB UK. Over to you, David.
Thank you very, very much. And hello, everyone, and thank you very much for joining the webinar. So I'm just going to take you through the first step of what value can I offer, and I'm talking from the publisher point of view here. So there's a number of questions we're going to raise here, and I want to give a few ideas about how a publisher can address these questions when stepping into programmatic to assess what value they have to offer to the buy side to make the monetization opportunity for themselves as appealing to the buy side as possible. Therefore, have a positive impact on revenue and ad request ECPM. So first of all is considerations around the inventory available to as a publisher and what you can make available to the buy side. What formats do I have? And there's a few examples here to consider, and this seems like a relatively straightforward question to ask yourself, but there are some considerations that aren't that clear on here, such as the kind of research you need to do to make sure you're sending out the right formats to the side, the ones that they're more inclined to buy. What's selling through on your display? What's working for you for display? These will be the similar formats that'll be appealing on the buy side. Do you have any bespoke formats? Would they be appealing within private marketplaces or programmatic guaranteed? What are the positive impacts on these bespoke formats? But can you deliver them at scale? Because there's no point in putting a format out into the open marketplace or private marketplace if buyers aren't willing to buy it. Can you monetize at scale? You have obviously standard display formats, MPUs, leaderboards, billboards, WMUs, but again, native is a key consideration for the buy side at the moment, and it is more bought programmatically. Do you have any real estate that you can make available to native, or would you bring native into competition with your standard formats? And formats are in high demand from the buy side, and this can only really be done by speaking to your key buyers and technology partners. When these formats are in high demand, do more of them available. There's a point where publishers can more formats to their site just to accommodate programmatic and make more inventory out to the buy side. This can impact on viewability, and in terms of supply and demand, if your supply outweighs the demand, it could devalue your overall real estate or ad inventory on the site. So be cautious about when making more ad formats available to accommodate programmatic. Also think about the user when looking at formats as well and making these available, because it does. The more format you have, it does impact on user experience. I offer only unsold inventory or all inventories programmatically. With a choice, do unsold first and foremost. Some publishers may close the formats if it is not monetized by programmatic or direct, so would consider themselves to have unsold and probably each impression individually. Some publishers may be lucky enough to sell through their entire inventory. They sell out their entire inventory on a monthly basis just to directly serve campaigns. So for the publishers who do have unsold inventory, you have two choices. Fulfill direct campaigns first, and then send what is deemed as unsold inventory to programmatic, or you can put into competition with direct campaigns your programmatic inventory and enable holistic yield management. Therefore, put in competition your direct and programmatic to enable a higher ad request eCPM overall, therefore pushing up yield and therefore overall revenue. This can be done through using dynamic allocation or header bidding. For those publishers lucky enough to sell through as well, please do consider programmatic, because if you sell through completely, you've still utilized programmatic, as I said, using dynamic allocation or header bidding to increase the overall eCPM of your inventory and therefore overall revenue, giving you a true image of the value of your inventory. All inventory has a value though. Anyway, what packages do you offer? Can I create special inventory packages on demand? Think about your unique selling point when selling direct, as the inventory packages that you sell directly will also be applicable to programmatic buyers. You can make these available through programmatic guaranteed or private marketplace. Also consider how trading desks are buying inventory and what's most important to them. Don't think just about travel, sport, news inventory. Think about viewable packages and high click-through inventory packages, as these are key KPIs or key performance indicators that buyers are optimizing towards and would make your private marketplace or programmatic guaranteed inventory far more appealing to them when you're making these packages available to them. What conditions are on what inventory is most valuable? International, do you need a tier pricing structure? So, you have unsold, like us, I mean, we consider each impression and format we have as value. Price our inventory accordingly, and therefore we when it's not filled. But basically, whether you're an international or purely local publisher, you need to understand the maturity of the programmatic market to inform your pricing. The market CPM expectations for all your inventory will have a key impact on how you're pricing. Know your strengths and what sells is key as well. Your pricing open marketplace, private marketplace, and programmatic guaranteed is also used to protect yourself against channel conflict. So when looking at programmatic, you need to price it accordingly, so therefore not taking away and devaluing your direct display part of the business, and making sure that you're getting incremental value or incremental revenue for your programmatic sales. So managing channel conflict is a key smooth transition into programmatic. And to really manage channel conflict, this comes from informed pricing and education as well. So we don't want to rob Peter to pay Paul. Screens and devices can I serve to? What are my channels and verticals? I mean, ad serving considerations need to be implemented here or considered here. For in-app inventory, do I need to implement SDK? Will there be development costs around when trying to monetize app inventory out there? Am I passing the right signals to the buy side when looking at, mobile? These are a few considerations to make sure when looking at which screen to monetize. Does native work better in my app, or will I yield better results from a sticky banner? You will find probably programmatic native solutions may be a better option when looking at in-app and mobile inventory, because it sits better on the page and is more likely to engage with. And lastly, on inventory, I'll do this along because I know we're tight on time. Am I a walled garden, open ecosystem? So this can mean two things. When tech provider, am I going to go with one single stack solution, or am I going to use multiple sell-side platforms to improve my monetization strategy? And that's entirely up to you. These are the requirements you set out at the start when moving on this journey. But it also, from the publisher point of view, is am I going to be a walled garden towards the side when I have selected my technology stack? So am I going to make my inventory transparent and available, open on the open marketplace, or am I going to ask buyers to engage with me in a private marketplace only environment? So this is key. Data. The key requirement in programmatic, and it's a key talking point, and there are many questions that arise when talking about data and making it available. So what do I know about my audience, first and foremost? So this comes down to how much you know and what value can you add to your data selection, data pitches. So do you collect registration data in accordance with privacy laws, obviously? Are you a site that only works on login or has the ability to collect login data and rich first-party data, or are you working on inferred data as well, so more user behavior data? Have you bought into a data management platform? Are you making available third-party data through programmatic? Is there a cost to making third-party data available via programmatic to the buyer side, or do you incur a charge when using that? These are a few key things when looking at your data strategy and making sure that you're collecting the right data first and foremost, but understanding what the buyers are looking for. A few things around utilizing data slightly differently is looking at data not on passing it out via the buy side, but looking at site trends around seasonality. So for example, it's a busy time of the year for all of us at the moment. Does your traffic have spikes around Black Friday or tech releases or something like that? Could you package that up in a certain way that really appeals to the buy side around this Christmas period? And again, moving on to, once you're understanding a little bit more about your audience, what data packages can I offer? Think of users you have, what buyers and advertisers you're kind of attracting when packaging these data. It would differ from different publishers, but the most important thing, which doesn't differ from different publishers, is about scale of these data packages. Making sure you've got scale on these audience packages is key because this will help with delivery and troubleshooting for future programmatic activity, because the buy side will likely overlay data on top of your deal IDs or data packages and frequency caps to ensure that their campaign has success, which can impede delivery on smaller data sets. So make sure when you're creating data packages, you have got scale sorts. Can I offer the data attached to inventory or not such as? So can I pass this data against deal IDs? Remember, not going too granular if you do, because this will cause delivery issues. But can I offer data as a standalone? And this is looking at things such as audience extension or packaging data and selling it to the buy side for them to utilize as second-party data. And there are many questions. Does it devalue from your product or does it enhance? If you have a high sell-through, are you able to really get the if a high sell-through on your site, are you able to monetize or make incremental value basically based on the data packages you're creating and selling out there to the buy side? But again, all of these can be answered with a release, I believe, of the IAB European white paper on using data effectively in programmatic. So please do take a look at that. Traffic quality indicators. Last and no means least, there's the one more after that. But what is my viewability rate by placement, and can it be improved? Considering ad placements that you put out to market is key. Ensure that your ads are being viewed, as it is a very big consideration by the buy side. It's one of the key performance indicators of the buy side is viewable placement, making sure every ad is viewed. And you can make assessments of this by working with ad verification vendors to assess the percentage of viewable ad placements you have. And this will really help you with your monetization strategy around programmatic. There are many ways to improve viewability of placements, and this will be for each publisher, but try to do this without using too many intrusive formats with high viewability click-throughs. We don't want to just be a place where we're having interstitials, because that can harm user behavior. Is my site network to brands? So am I sending brand safe? Is it human traffic? Again, working with ad verification vendors, they can also assess this, but it's really important to do this regularly, and it's worth considering for both viewable and brand safe and ad safe things to check out a few different ad verification vendors out there in the marketplace, because they will provide you with different measurements back, and it's key to make sure you're doing a regular health check. Can I verify my audience? So can you work with digital measurement audience analytic companies to verify your first-party data segments so it's recognized against similar buy-side, third-party data segments that the buy-side would use regularly? This will really help enhance the first-party data quality that you're passing out there to the buy-side, and therefore help you justify higher CPMs because it has been verified. What is my exposure time per placement? Again, it would have ability, but there is a set standard on view in view or in view at the moment. But it's also a consideration if you're looking to a cost per view or even a cost per hour cost metric, as some publishers are moving to. Ad clutter, how many ads are on my page? This will affect performance, but again, consider the user as well, because it will affect user experience. More ads does sometimes mean more revenue. However, if you're putting too much supply out to market, it devalues it, as I said at the start. But ad blocking has arisen, not just to bad ads, but to bad experiences too. So consider about ad clutter. And use third-party verification tools to quality controls, basically viewability and fraud. As mentioned above, are you giving yourself regular health checks, and is it done at the campaign level? The buyer would probably do this quite a bit and give good feedback, but regular health checks are good. I know it's not programmatic specific, but consider ad blocking at the moment. And assess what revenue impact the revenue impact from ad blocking is on your site. Will help you inform your decision about what the best course of action. Ad blocking reportedly has cost publishers $24 billion globally in 2015. So we need to think about this. And there's a few can do. I mean, think about the user and why they're doing it, but how are you going to respond to this? Could you use an ad blocker? Could you insertion? Would you polite notification? Would you improve user experience, such as via lean, or take no action at all? I mean, my point of view, just to share, is that the bids are free at the point of consumption, and ad blocking is an expression or a choice by the user. We got to block, but insert or use polite notice, but instead we adhere to the IAB lean principle to reduce the impact of advertising on user, improving the user's experience when consuming BBC's globally trusted content, reducing the need to block ads. In turn, this has a positive result on advertisers' activity, fewer ads, better engagement, and better results for all involved.
Thanks. That was Seb Goddard, Head of Programmatic Trading at BBC Worldwide. Just before I hand over to Renee, I call on Michelle, who's the speaker after Renee. Michelle, we still need you to dial in with your telephone in addition to being logged into the WebEx. So if you get this message, can you kindly do that? Or give Mary Claire a call if you have any doubts about it, okay? Or communicate with her via your chat box. So I'm going to hand over to Renee Klug, Chief Strategy Officer at Improve Digital, who's going to talk about how to sell. Oh, Renee.
Thank you, Evan. Hi. Yes. So, how do I want to sell? We basically have distinguished 5 ways of selling programmatically. Although I would say that one of those 5 ways is maybe more like a setup. And 5 ways are: firstly, open real-time bidding. Secondly, this is a private PMP. There is automated guaranteed heading and a manual selling. Now let's kick off with Open RTB. Now, Open RTB, open real-time bidding, is basically real bidding in its truest sense. So we really have an open market of supply and demand, and I'd say in its purest form, there are no constraints to that open market working. So what that really means is that you basically offer your impression to the market, and for each impression is determined by the market. And that price will be, of course, the highest bid that you received in the marketplace. I'm sure aware the auction that we use is a Vickery auction, and that means that the second highest bid actually counts. So let's say there are 10 DSPs bidding for a certain impression. One DSP wins it, let's say, at a price of £2, and then the next one essentially offers £1.50. The actual impression is being sold for £1.51. So it's always the second price that really counts. Now, in the open market version, there is really no control, frankly. It's really the market determining exactly what kind of pricing you can achieve with what kind of impression. So if you have a very strong demand, the price is going to go up because there's going to be more demand partners, more buyers in the market vying, let's say, for your impression. Obviously, and conversely, when there's little demand in the market, prices will go down. So it's actually a pure and a full market mechanism. Now, because it's so, let's say, market-driven and there is not that much control, let's say, at least in the pure version, Open RTB was really used for remnants, so for unsold inventory in the past. But many things have changed with Open RTB in recent years, and many more controls have been added to the equation. For example, there are controls like floor pricing that you can put in. So then you can say, well, I'm happy to do open market, but I don't want to sell this impression below a certain price. There is blacklisting of certain providers, there's whitelisting of certain providers, and of course, with data, you can actually also now segment much better on how you actually want to put each impression into the market. So with these controls, actually price will go up. And what we see now is that plenty of players, and I think David also alluded to it, plenty of players now actually look at their programmatic strategy and use OpenRTB also for their premium inventory. Basically, what we see is that OpenRTB is mainly used, let's say, as the primary source of selling by what we call digital natives. So these are probably the companies that not come out of the traditional media space, but they are, let's say, websites or web presences first, and basically have learned to do online advertising immediately in a real-time bidding world. Say that a lot of players who have been in the market for a longer time, who have more complex strategies, will use OpenRTB, let's say an unfettered OpenRTB, as one of their channels. A way of your inventory programmatically is the private marketplace. Now, normally I would say the private marketplace is really a controlled version of real-time bidding. Because here, of course, very clearly, you do not address the entire market, but you just address a number of pre-selected buyers. And also, you don't address them, say, in open market fashion. You actually have some pre-agreed conditions that you can offer to the buyers. And so, because of this additional control, a lot of people will say that a private marketplace is a much safer place to sell your inventory in. And it's also, let's say, a safer place because you know, or you have to have a relationship with the buyers that will, in the end, win your inventory. New opportunity comes, again, data. I guess data is the big word in our industry. Data is imperative for programmatic, also already mentioned by David. And when you add data, you can actually start to segment those deals and those deal IDs, so the marketplace and the different words for those deal IDs. You can segment them according to various different profiles. So you might be selling one impression on a certain deal ID, but then you segment it based on audience that actually comes to the particular impression. So this means that not only do you have more control over the buyer, what kind of options does the buyer have, you can also now actually segment more granularly how you want to monetize impression and what kind of profiles you want to create to sell the impression to. And all of this together obviously will have an upward push to pricing. Now, what about these private marketplaces and these deals? You could wonder, what are these deals and what does a deal contain? I think in the simplest version, obviously, is it's the pricing. Obviously, you have some kind of agreement, what kind of pricing you want to have for a certain impression. This could be fixed pricing, this could be minimum pricing, but there are more things you can actually do within a deal ID. You can talk about timing, of course, context is a factor in here, frequency can be a factor in here, and so you can see that this gives really all the ingredients you need to start scoping and creating a strategy around each and every impression, basically, you want to sell into the market. For all of this control, and let's say for all of this, let's say, evolution of the initial OpenRTB, I think a lot of people will say that this is the way to sell premium inventory rather than sold inventory. But you can also see that when you look at the improvements in OpenRTB, you see that with additional controls, OpenRTB has become a day for itself. And I would venture to say that the private marketplace is actually a little closer today than it used to be to an OpenRTB situation where you put the controls directly. There's only maybe one downside to PMP. Well, downside. There's one thing you need to do with PMP. With that, there is some human touch involved, of course. We're talking about deals, so you have to have a deal team that actually talks to the buyers and implements or insert those deals in the various systems in the SSPs. So it also means that each and every deal and each and every segmentation you make in the deal, you would have to put into the system. So this does create a little bit of work for the ad team. But the good is, of course, that you do have what I call guaranteed attention. So if you just connect OpenRTB, obviously you're quite dependent on demand type to find you. In this case, you make a deal, everybody knows you're there, and those buyers will obviously automatically and naturally bid for your trade. This sales channel or sales method within programmatic I would like to talk about is automated guaranteed. Now, there are a few different ways how you can interpret this. The most basic way of automated guarantees is really just an API connection to ad server that allows you to book and sell your entry programmatically. But the actual key of it and the actual of your impression will still be ad server driven. There's another way, which I would call dynamic guaranteed, which we call it in Proof Digital, we call it smart guaranteed. This is we add a little bit of complexity to it, but it also makes it exciting, because what happens is you actually take a deal ID that I just described and you add a delivery target and a guarantee to that. So that means that not only do you offer your impressions into the market under certain conditions, you will also start guaranteeing to the buy side that you can sell an impression a number of times to a certain audience against certain pricing. In this case also, it becomes quite important, of course, where you are placed in the big chain, because it is easy to give a guarantee if you are at the front of the system, and when you can say, well, I can see all traffic coming by, and based on that, I can always pick and choose the right buyers in order to fulfill my contract. All the way down in the bottom of the chain, let's say, then a lot of traffic has already passed by, and it will be difficult to really guarantee a certain audience just because you don't have access to the entire flow of audience going by. But we'll get to that when we talk about header bidding. So yeah, just in short, dynamic guaranteed is a guaranteed way of seeing your inventory, and the most important thing is that it's campaign, it's your targets, it measures how you are doing versus your targets, and it's a priority of a certain campaign against those targets. So if the campaign is behind, it will not always win. If a campaign is behind, it might win a certain impression, even if it doesn't offer the highest price. So the system is becoming quite complex, but also very, very interesting. And you can already see that you can make a lot of different strategies around this. So I had ample time, but I can see that I'm also running behind now. Let's talk about bidding. Header bidding is particularly less a way to sell your inventory. It's more like a setup. It's more of a concept that has allowed us to do much more with programmatic than we used to. In a traditional setup, so a non-header bidding setup, you would usually have an ad server that has the opportunity to sell the ad first, and only if the ad server cannot serve the ad, it would be passed on to an SSP, and the SSP would then try to sell it in the wider audience. Now, header bidding changes that. Header bidding actually does not put the programmatic impression at the end of the chain, it actually puts it at the beginning of the chain, so hence in the header. Now, at the beginning of the chain, of course, suddenly the programmatic impression have access, simply to all the traffic, all the audience that comes through the system. And clearly, if you set it up right, you can really increase the CPM through this method. In very short, how it works. So before the ad server is called, in the header, one SP or more SSPs get the opportunity to offer a certain impression. All the SPs will actually then come back with a certain bid that has been generated in the market. That bid or those bids are then fed into the ad server, and the ad server can then decide which bid is best, the one inside the ad server or the one that has come from the header bidding. Obviously, indeed, this is the first step into a holistic system. So with holistic, of course, we mean you have one system through which we monetize all our impressions. The dynamic allocation is basically the same thing. Well, I wouldn't say same thing, but it's a very similar thing as header bidding, but then within the Google universe. Then we talk about dynamic allocation. There's one we should add here, though, which I think is quite important, which header bidding is really a great first step into a holistic system. But we're there yet. So after header bidding, I think the holy grail is a true holistic system, a system that really takes each and every impression and takes all the different buying methods out there and adds it to it. So what I mean by that is you have a fixed campaign, you've got an open market campaign, you have a deal ID, you have what segment you can think of, and you go into one big auction and you have the best impression win. Now, those are the newest system, and that's definitely also the direction that we are going, that many of our colleagues are going as well, would be realistic and probably one step beyond header bidding. Okay, now finally, and apologies already for overrunning, there of course is still the manual way. And the manual way, some things you just cannot do programmatically. Even though we do more and more and more programmatically these days, there should be a certain standard in order to be found in a programmatic environment. So there are things such as roadblocks in certain cases, although not in all cases, certain particular formats that depend on, let's say, a certain layout over the page, where you, for example, have 2 or 3 impressions on one page that need to be synced. Those kind of situations might sometimes still need manual intervention. But of course, our aim and that of our colleagues is take out the manual intervention and make sure that everything can be traded programmatically.
Renee, that was super. So I'm going to hand over quickly to Michelle, who's going to talk about partnering. So over to you, Michelle.
Thanks. Right, so I'm going to cover the area really about how we go about partnering with a tech side partner today, especially on the supply side, and how I think this is definitely a topic that is become a lot more interesting over the last year, as there's been a lot of seismic shifts with partnerships on my side. So I'd like to take you through some key considerations that we've thought put together as an industry in how to go about that. Let me move on to the first slide. Right, first, this key consideration is transparency. And transparency has been bounced around a lot this year. We've certainly seen it with a lot of the publishers that we work with. And it really boils down to asking the questions of what sort of visibility are your partners, your technology partners, offering you into their own system and their processes. For example, they're offering you a UI or a system interface where you can log in and have a look at their data, have a look at how your data is transacting in their systems, and take it a step further and dive into understanding the mechanics that sit behind those systems. We see this specifically when we start to talk about audience data and the control of that audience data. A key question that you might want to ask is, I control the data that I share with my tech partner, and what is that data? And the question about the data can easily be bounced around between who is it? Is it the tech partner? Is it the publisher? I think my users would probably argue that they own their own data. But really, it's more about how that data is being shifted and how it's being respected within these systems. So taking a deeper dive into how those systems are moving data and ask questions of how you prevent data leakage when trading programmatically. And it's really key to start diving deeper into how these systems work behind the scenes. And often we shy away from this because it could sound a bit more techy or a bit more advanced, but really it's just key data components that are being passed in the system between buyer and seller, being the publisher, and a tech partner that's in the middle of that. For example, at PulsePoint, we are doing quite a lot of work in the medical sector, and I don't think there's any more important area for data sensitivity than medical. And there, for example, you would want to question what kind of bodies or regulatory bodies are tech partners working with around, sharing something as sensitive as medical data and programmatic. And as that starts to advance, you would ask what kind of bodies do they work with, of sharing personal identifiable information on your users, as well as how they go to your page, scan information about your users, about your page, and take it back into the system. And it really boils down into that transparency, that relationship with your technology partner, where you view that information and you can take it down to impression level, because it's not enough today to just look at a campaign level and just to how your campaign is doing with the data, but rather taking it down to impression level and the quality of the impression and where that impression is being served to each user and how the data of that user is being transferred. The component that I would say we need to look at, and it's probably the most important to many publishers in the room, is revenue. I think we're all in this space because we want to make more money, we want to improve our revenue and our yields, and we speak about a $6 billion market, so clearly revenue is very close to our heart. And as we've seen over a period of time and the involvement of programmatic, coming out of the network days where we saw fixed fee models, we saw CPA, CC models, we're now in an area where we've got a mixture of models such as, let's say, flat fee, which I'll come on to in a minute, of how that's starting to evolve. But let's say flat fee for a service or a product, or a rev share model, for example, where both the publisher and the partner will work to take a certain cut on each side, and they make their money, and obviously how they improve their revenue. And what we've seen in OpenRTB is the concept of second price auctioning, where really, if you look at it, it splits in the middle and says, are we taking the money, or are we looking at the money from the supply side, being the publisher, or the buy side, which is really being the advertisers? Where are the tech partners working with the publishers to have that transparency on how their revenue model is working and how they are helping publishers maximize and improve their yields? And this is often what we see has not always been the most transparent in the industry. And as this continues to evolve over time, and publishers start to ask themselves, well, when I work with a tech partner, what kind of fee should I be going for? What kind of revenue model should I be going for? It's really about asking yourselves where you are in your programmatic journey and where you see yourself in the future. I typically see today a lot of publishers moving into SaaS or software as a service type models, which is typically centered around, let's say, a fee for licensing a product, working with a tech player or tech partner to have access to a product or to services, and being able to use that and customize it to make it their own. And we're really starting to see more publishers go that route. Then I have the next component to consider, which is in-house. And this topic is really getting a little bit more exciting, specifically with the more, I'd say, premium, sophisticated publishers who definitely have the resource to manage this. And it really boils down to, publishers asking themselves if it's more cost-effective to work with in-house specialists and traders and data scientists, and really go back into holding on to the control of their audience and their data. And we certainly, with the likes of Amazon, for example, is a good example of where we've seen some of that happening. And we, again, would encourage that if publishers want to start taking technology in-house, and we see this moving from, just being a programmatic partnership to a technology partnership, then how are they starting to work with partners to make sure they have a very strong relationship with that partner and how they can develop their tech in-house? And here again, we've seen a lot of white labeling of products. We've seen a lot of unique partnerships being formed. And I think there's a question around, resource and engineering and education about implementing your own technology and going to form direct partnerships with the different buy-side advertisers, etc. Because as you start to manage this yourself, you will understand that there's a lot of resource that goes into it. And as a publisher, you just have to ask whether you want to compromise, the key of or the core of your business, which is content creation, or if you would rather with a technology company that can help lead that path for you and advise you. And if that's the route that you want to take, then you would really come on to the next component and look at suitability. Suitability is really about how well your tech partner or your supply side partner is really helping you by aligning to your objectives, to your KPIs, to your company philosophy, and working with you to understand the core of your business. The days of just going in, handing over a product and lifting your hands and waiting to see the results are no longer. We are seeing partnerships now becoming very consultative, really going in a deep level of understanding the publisher's business, their audience, as well as the available resources, the education levels, and really consulting with their publisher on a journey that is much more long-term, advising on and riding that wave on how they can develop products that will work and are suitable for that publisher based on the audience and the user experience as they continue to build out different models. So suitability is absolutely key. But I don't think we can speak about transparency, revenue, even suitability and in-house if we don't get back to the core basics, again, that looks at the quality metrics that partners are offering. And with the quality metrics, we really start to bring up the questions of how are your partners working with the relevant industry bodies to ensure that the data that they're sharing with you is not only reliable and valid, effective, but rather trustworthy. And there's a few bodies. We know we've got the IAB Programmatic Trading Council that advises on a daily basis on how both the buy side and sell side should be working together to make sure that they have the best advertising practices. And we've seen other ones, like the Digital Trading Standards Group, the MRC, all these bodies that stand out amongst many others, and they are making sure the industry is moving forward in an ethical manner. And this is really key to the involvement of programmatic. We've had a lot of questions over the last year about will programmatic be around? Where is it going? How many publishers are hanging on to the idea of direct sales and guaranteed orders and things like that? And really, what it boils down to is how we as an industry continue to evolve as making sure we're working with the right bodies and information that we can trust and share transparently with each other. And the next, which brings me to the next point, which is all about what partners doing in the space with industry conversations. Because we, as an industry, we shouldn't only be going to events or going to webinars to take, so we can go back and learn, see how we can evolve and adapt our own products. But what are we giving back? How are we voicing our opinions, our failures, and even our successes, and growing as an industry? How can we all be market leaders and share that knowledge so that we can stand out? And I think when we choose our programmatic partners, and certainly our supply side partners, we'll be asking how they represent the work that we do together in industry and with the relevant bodies. And on the line of quality metrics, it's becoming more and more important, especially as we look at the development of, let's say, video and programmatic and how that is taking off in 2016 and certainly over 2017 we'll see more, is how are your tech partners offering suitable controls to manage advertisers and creatives that are across your inventory. And this is becoming more and more important as we look at we've spoken about ad blocking with user experience, but we've also we have to look at user experience with the right creators and make sure that the best advertising is being shown in front of the user at the right time. And this goes down again to that impression level and saying, well, what are your partners doing for the information that they share? How much are they sharing about an audience, and how much are they sharing actually about the content or the environment in which that impression sits? How is that being translated back to the advertiser? And what is the advertiser actually giving back, and matching those demand side brands, let's say, with the supply side brands which come from the publisher, and ultimately what sits behind that is the audience. Really making sure that the right tools are in place We spoke earlier about the right regulatory bodies. We know there's many great third-party companies, viewability companies out there. We know that there's great malware companies helping to detect bad in advertising, but there's still a great element of human intervention. And as long as all these different components will be at the tip of our tongues in the way we decide to partner, human intervention will still be key and still be really, really reliable and relevant in how our bodies are working together. That's all for me, so I'm going to hand it over. Thank you very much.
Thanks, Michelle. That was Michelle Raubenheimer, Senior Public Development Manager at PulsePoint. So, Michelle, I think there might be a blog coming up from you there on giving back to the industry if you're not careful. So thank you for that. So last but not least, I'm going to hand over to David Frew, Senior Programs Manager at IAB UK, who's going to try to encapsulate what your next step should be, digested all of the previous information. Over to David.
Thank you, Alison. Well, I took the easiest job of the afternoon because really step 4 isn't really step 4 at all. Step 4 is step 1 all over again. This whole thing is a iterative process whereby I have to continuously go through all of the learnings that the previous presenters have been through, all of these steps and all of the evaluations that are required, and to come up with something that works for you, because everybody's situation in this case is going to be unique. You discover over time that what works for you doesn't necessarily work for your nearest competitors. It's a static process. There's going to be organic growth over time. Hopefully, if you're doing things right and monitoring the situation, you'll be collecting more and more data, and that data can lead to newer insights. Maybe you can discover a new premium offering that you couldn't previously offer. You can take a particular process that was previously something you had to partner with an external vendor for in-house. And there are manual parts of the site that you decided actually can be programmatically. But some of the key considerations are definitely not to undervalue the inventory of your offering. If you're pushing a lot of your supply out there, but undervaluing it, then yes, there will be a lot of demand for it, but you'll be selling yourself short. There's no one-size-fits-all template for everyone to follow. Whatever works for you doesn't necessarily work for other people. And you don't need to get locked into anything until you've had a chance to test it. There'd be anybody knocking on your door and demanding that you sign a 5-year contract for anything because you need to test it. You need to fail before you succeed. You need to keep going through this process. It's going to be a never-ending loop, which isn't necessarily such a bad thing because it will hopefully end up leading to the situation improving. I have really, because everybody already said before what was going to be.
I don't think it's just as well that's all you have, because we're nearly out of time, and in fact that's perfect timing. So I'm just going to, as we're nearly up, I'm just going to ask you one question, okay? And that's about benchmarking and how publishers, how they can measure their own progress and have a sense that their programmatic strategy is advancing.
The question we get asked at the IAB a lot, I'm sure you guys do at IAB Europe, people are asking for like the industry average CPMs and what click-through rate I'd be having. But really it's going to be all about what the success is in campaigns rebooking. It's going to be about monitoring your eCPMs either at a vertical level or a format level and discovering what is working and what is not. What changes led to an increase in those effective CPMs and what didn't work so well. Anytime you encounter a mistake, you can just reverse that and go back to what did work and try something new.
Oh, super. Thanks very much. Well, I'd really like to thank all of today's speakers. And just as a reminder, we heard from David Goddard, Global Head of Programmatic Trading, BBC Worldwide, René, Chief Strategy Officer at Improved Digital, Michelle Raubenheimer, Senior Publisher Development Manager at PulsePoint, and lastly, David from IAB UK. So if you didn't manage to catch all of today's webinar recording, that will be on our website in the next couple of days. I'd like to remind you, last of all, about the week's Buy-Side webinar. So it's on the 24th of November at 2 o'clock GMT, 1500 CET. You'll be to provide your feedback in the survey at the end of the webinar. I'd also encourage you to visit our programmatic library, which has got some great best practice study in it. And last of all, as David said earlier, don't forget to download today's Using to Effectively in Programmatic white paper. Thanks very much for your attendance today. Do contact us if you want to get more involved in IAB Europe activities, and look forward to hearing from you in the future. Thanks again. Bye.